After Bitcoin topped out in October of 2025, it subsequently declined by more than 50%, while the S&P 500 continued to move higher, gaining more than 10% in the same period of time. This is not happening by coincidence. History shows that there are certain reasons for why Bitcoin and the stock market are currently diverging like this. In today's video, we take a deeper look at the necessary data to uncover what the current market environment is secretly telling us about what is going to happen next to Bitcoin. So let's start from the beginning. The Bitcoin price is moving in cycles. Those cycles tend to be around 4 years long, with the cycle top forming out in the post-halving year, which is then followed by the bear market. As 2025 was the last post-halving year, most agree Bitcoin is currently witnessing a bear market, which historically always took around 1 year to fully form out a bottom. In 2017, Bitcoin topped in December and bottomed in December the following year. In 2021, Bitcoin topped in November and bottomed in November the following year. In 2025, Bitcoin topped in October, which would suggest we will see Bitcoin finding a bottom in October of this year again. So it seems like the Bitcoin cycle is still intact. However, it's not as simple as that. To truly understand the existing macroeconomic environment, let's first have a look at the Fed's balance sheet. Whenever the Fed's balance sheet is expanding, this means the Fed buys assets, which injects liquidity into the financial system. When the Fed's balance sheet is shrinking, this means the Fed sells assets, which therefore extracts liquidity. You can see that in the bull markets of 2013, 2017, and of 2021, the balance sheet of the Fed has always been neutral or expanding. Now, what's interesting is that the last bull market actually occurred as the Fed's balance sheet has been shrinking, and not only that, at the same time, interest rates have been hovering near 5%. This kind of monetary policy is not what you would expect to lead a risk asset like Bitcoin to witness a bull market. The only other instance Bitcoin witnessed a bull market while monetary policy was this tight was in 2019. In 2019, the Fed has been transitioning from shrinking to expanding its balance sheet, while Bitcoin transitioned into a bear market. In December of 2025, the Fed has again transitioned from shrinking to now expanding its balance sheet, which again roughly paralleled with the start of this bear market. So there are undoubtedly many similarities between the 2019 and the 2025 bull market, but at the same time, because of the 4-year cycle, the bear markets of 2018 and 2022 also remain important analogies. Now, to further understand the current macroeconomic environment, we like to take a closer look at credit growth in the US. This chart shows you the growth rate of liabilities from non-financial corporate businesses in the form of debt securities and loans. Historically, whenever the growth of liabilities reached a certain extent, a recession followed, as debt levels have been unsustainable. It is like a continuously growing balloon. At some point it is going to explode. If you now overlay the Bitcoin price, you can see a rather negative correlation between the two. In other words, when corporate debt has been rising, Bitcoin often trended downward. When corporate debt fell, Bitcoin often strengthened significantly. The bull markets of 2017, 2021, and 2025 have all been accompanied by corporate debt growth staying neutral or declining. Now, as corporate debt is currently growing significantly again, and as Bitcoin has entered a bear market, this correlation is still intact. And as corporate debt growth likely continues to accelerate, that likely coincides Bitcoin continuing to decline in the next few months. So if you don't want to miss the Bitcoin bottom and get valuable market insights, make sure to subscribe to our channel and activate the notification bell. Let's continue by taking a look at total assets currently invested in money market funds. A money market fund is a fund that buys very short-term, high-quality debt, like for example treasury bills, instead of stocks or long-term bonds. Historically, periods assets have been flowing into those funds have often been times of economic uncertainty, including recessions, as for example the dot-com crash, the Great Financial Crisis, or the COVID pandemic. This is happening because liquidity-sensitive assets like Bitcoin tend to underperform, as the last few months have been clearly illustrating. When capital continues to flow into money market funds in this velocity, at some point not only Bitcoin but also stocks will witness significant selling pressure. Now, because of Bitcoin's relatively short history, it's not easy to illustrate what will happen to Bitcoin in the next few years. What is possible, though, is to take a look at the gold price throughout history, as gold has similar characteristics and therefore follows the Bitcoin price relatively closely. If you now zoom out and view the broader historical cycles of gold, you can clearly identify periods of consolidation and periods of significant price appreciation, which we like to call the commodity supercycle. Those periods have been characterized by weak monetary policy, or in other words, excessive money printing, ultimately leading to high inflation. While inflation was high, economic growth when measured in real terms was low, which is describing an environment called stagflation. In this kind of environment, the stock market might hold up when measured against the dollar, but this is only the case because the dollar is being devalued. If you measure the stock market in gold instead of dollars, you can clearly identify those stagflationary environments, as in each and every time the stock market depreciated when measured against gold. This is what happened in the 1930s, the 1970s, the 2000s, and as you can see, it is happening right now once again. Now let's connect all the dots. In the last few months, not only Bitcoin but also gold prices have been declining significantly, while the stock market and money market funds continue to appreciate. We at Kronos believe this can be explained by market sentiment transitioning from risk on to risk off, which will sooner or later also cause stocks to witness significant corrections as capital is flowing further into safe assets. We believe this new market environment compares best to the 1970s environment, which has been characterized by similar conflicts with the OPEC oil embargo in 1973 or the Iranian Revolution in 1979. Those conflicts, but also the excessive money printing used to manage the rising debt burdens, led to rising inflation. This is important because even though gold witnessed significant corrections in recessions, it still rallied from $35 per ounce in 1970 to more than $860 in 1980. The similarities between now and the 1970s are plentiful, which is why we believe similar outcomes are likely, making exposure to scarce assets like gold, but also Bitcoin, absolutely necessary in our eyes. As the Bitcoin and gold price is currently declining, those are the periods to start accumulating, because historically, those periods of weakness never lasted long. So if you have any further questions, don't hesitate to ask them down below in the comment section, and if you found this analysis valuable, please subscribe to our channel and hit the like button, as it helps us reach out to more people who need to understand what is currently happening. Thank you for your time.